Hello everyone and welcome to my second video. What is money laundering? Money laundering is the process by which criminals clean their dirty money. Meaning, it's a method used by criminals to hide the original source of their money. The term laundering comes from Al Capone, who is a famous Italian mafia boss. He purchased a number of laundromats to hide the source of his illegal money. So, how does this work? Well, through three main stages. They are called the three money laundering stages, which are 1. Placement, 2. Layering, and 3. Integration. Criminals mostly use cash-intensive businesses to launder money. Let's take the following example. A criminal who made a lot of money selling illegal products finds a nice local store that only accepts cash, and he purchases it from the owner. Then the criminal would start to mix his dirty money with the store's clean money. He goes every week to the local bank and deposits large sums of cash into the store's bank account and claims its profits from his business. The criminal might also fake invoices to show that he actually made those sales and to justify his profits. This stage is called the placement stage. The criminal has now managed to place his dirty money in the banking system. In order to further hide the origin of the money, he then proceeds with transferring the money from the bank account to other accounts already set up in different jurisdictions. He would repeat this process over and over again until it becomes very difficult to know the actual source of the money. This stage is called layering. The final stage of money laundering is called integration. It is when the criminal is able to finally use his laundered money. For example, the client uses one of his layered bank accounts to purchase an expensive car or a house. So, why is money laundering illegal? Well, basically because it encourages criminals to continue doing their illegal activities since it's very profitable. This could have serious negative impacts on the society and the economy as a whole. That's why countries make it illegal to launder money. In Bahrain, for example, where this video is taken, the penalty for laundering money can reach up to $2.6 million, not to mention jail time. So, how do banks make sure their accounts are not being used by criminals to launder their money? Well, by having an MLRO, who is the Money Laundering Reporting Officer. The MLRO is an independent person within the bank who is responsible to create policies and procedures to minimize the risk of money laundering. They are also the ones who monitor transactions and conduct investigations whenever there are any suspicious activities in any account. If they suspect one of their clients is involved in money laundering, they will investigate and issue a report called an STR, Suspicious Transaction Report. This report would have all the details of the transaction and the parties involved, along with the dates of the transfers, passport copies of the suspects, and any other information deemed necessary. The report then gets sent to the board of directors and the central bank along with the Financial Intelligence Agency. And that's basically what an MLRO does. If you have any questions, please feel free to let me know. And if this short video was helpful, please like and subscribe as it does help the channel. Thank you.